Okay, just one last question. What do you think between the technical analysis and fundamental analysis? Because this one of the most of the topic that people outside there is argue. We know that we already discussed about the asset management. We diversify, right? So you have both analysis and you have both fundamental to sustainability. We clear about that. But for the general speaking, between the technical analysis and fundamental analysis, which one better, or how to utilize both in order to make better decisions in our, I can say, in investment.
So let's try to answer or analyze your question properly, right? There is a lot of people and a lot of discussion.
Yeah, there's a lot of discussion.
Between the topic of is technical better or fundamental better, right? Better in what? Better in making money, better in surviving, better in wealth creation. We need to
clear on that.
We have to be clear on
the outcome,
on what is the objective of the investor. Is it short term? Is it long term? Is it mid term? So I would like to probably share with you a study that we have discussed briefly on the OIC conference. Right? So I'm an academic background, but I would say if you look at this with common sense, then there is space for technical analysis and fundamental. I'm more on the fundamental side, right? It has to be clear. That's a disclaimer. I work in a fundamental analyst company that is not using any technicals whatsoever for investments. Zero. And do we make money? Yes. Right? Do we manage large amounts of money? Yes. And what is our performance last year? Just to give you an idea, in Malaysia, the market was down 6%.
Wow.
Over the year.
Wow.
KLCI down 6%.
Yeah, KLCI down 6%.
Our ASEAN equity fund in Malaysia ringgit was up 10%. That's a 10% plus.
That's a good.
Last year. And the Global Sustainable Fund, the Green Fund, was up 24% in US dollar.
Wow.
So anybody who invested in 1st of January 2019 until 1st of January 2020, 24% plus by doing nothing. I want to say that because the major difference between fundamental and technical, you might say, is in technical you have to follow, you have to be active all the time, while in fundamental you invest and then you go about your job, right? So while I like to follow the market, do I have time is a big question, right? You see how we can approach this. But let's discuss our company owners. They don't believe at all that we should consider buying a security because one line crosses the other line. They don't believe in that. They strictly think like if there is a golden cross or like something, that you need to buy, or this is a selling signal. They don't believe in that. So what do we believe in is we find a good company and just buy the stock and grow with the company. Apple is an example. We bought Apple at $1. Now it's at $320. This is an example. So what would a technical trader do? What would a fundamental analyst do? Technical would try to buy and sell over the last 20 years. Fundamental would just buy
and relax
and hold, right? And one rationale on the fundamental is you analyze a good company. When you find it, stick to it. Until when? Until there is a reason to sell. It could be that it becomes Sharia non-compliant or environmentally problematic or something like that. Then there is a reason to sell. Another reason to sell is you want to buy a car, you want to buy a house, you want to help your dad retire. You need the money, then you sell, right? So that's a very common sense understanding of buying and selling, investing in general. If not, keep the money invested in the stock market. That's basically the overall idea. But the study, I want to mention a study that analyzed a lot of technical analysts and a lot of fundamental analysts, right? So he asked this question, this academic professor, his name is Eugene Farmer. Eugene Farmer asked, do technical analysts consistently outperform the market? So he analyzed a lot of technical funds, technical analyst funds, technical traders on their trades. He analyzed all their trades and questions, do they consistently outperform the market? So the market is up 10%, are they up 11%?
Okay.
The market is down 5%. Are the technical analysts down 4%? Is already outperforming the market. He asked this question, and his surprising answer is no. Technical analyst, technical trading does not consistently outperform the market. So the answer is technical analyst does not outperform the market.
Okay.
And this is scientifically proven by this man. He got the Nobel Prize for it. He is a Nobel Prize winner. Okay, then the second question he asked in his research, do insider traders consistently outperform the market? Insider traders have information that the normal market does not have. So, do they outperform the market or not? Let's say you know somebody from Petronas in the board, or Felda, right? Or some company in Malaysia, Sunway, and the board member says, and you go and buy the shares. And then they announce the news. And you are in the market before the news break. So you make money before anybody else. So these people, the insider traders, which is by the way illegal, do they
make money
outperform the market consistently? The consistently is the difficult part, right? One time you may.
Of course you can make.
Technical the same, right? One time you may, two time you may, but consistently.
Yeah.
And the answer for the insider traders is also no. They could not consistently outperform the market. Now comes the fundamental analyst, right? Like companies like us. What do? We analyze public information. We analyze public information and then we act upon them. This is a fundamental analyst. So we check revenue, profit, earnings per share, PE ratio, these kind of things. And then if you like the company, we buy them. If you don't like the company, we don't buy them. Or the company is not a good performing company, then we sell them. So fundamental analysts. Question is, again, Eugene Farmer, in his research, can fundamental analysts consistently outperform the market? Yes.
Sorry, come again? Insider?
Yes.
No.
Fundamental analysts,
fundamental.
can they consistently outperform the market? What's the answer? Yes or no?
I think no.
No.
No, I think
Correct.
no.
So even fundamental analysts, Eugene Farmer find out, cannot consistently outperform the market. Why is that? We don't know. Because the market, he argues, the market, if the market, he has market efficient hypothesis. He developed a hypothesis, a theory called efficient market hypothesis. So he argues if the market, the stock market, is efficient, nobody can outperform the market. So the market knows better than any manager. He argues that and he has proof for that. So he basically says, buy into the market. Buy the stock index. Buy the S&P 500 KLCI because nobody in this area can outperform the market. He also put some exceptions. He said, but there are exceptions in the fundamental analyst field, like our companies, that consistently outperform the market. But they are so few that is not, you cannot generalize. There are some asset managers like ours, we are consistently outperforming the market. our big funds that are 30 years old outperform the S&P 500 consistently over the long run. Every year, higher, right? So can we outperform the market? We can. But Eugene Fama argues that fundamental analysts in general cannot outperform the market. No one can. So the market is stronger. He says the market is so efficient over the long run that nobody can outperform the market. So then the fundamental analysts like me asked him, so what is our job then? Why should people pay us fees, or you fees, if you cannot outperform the market? And the answer, he said, is they would pay you to reduce their risk for diversification. We talked about diversification in earlier session, in an earlier question, right? So our clients, our mandates, our customers who give us money, they give us money to diversify their risk. That's why they would pay fundamental analysts or asset managers. Just to give you some idea on...
Yeah, got you.
Right, so this is a good way of thinking about the market. I think technical analysis has their place. Fundamental analysis has their place. You need to utilize both worlds in a proper way. And also what Eugene Fama said created a huge new trend called passive investing. Passive investing. Maybe at some future video interviews, we can talk about passive investing a bit more. It's a mega trend in the financial sector, probably the fastest growing sector. And here we're talking about instruments like index funds or ETFs or
that's great.
smart beta. Okay,
all right.
Thank you.
All right, so thank you so much. That was a great interview sessions, more on the sharing part, and I can say that Mustafa share with us transparently. Thank you so much. So hopefully can give you some ideas and give you some how we want to go further in kind of a professional ways, in order to in terms of wealth creation. But you need to know what you are doing. Really important that you have knowledge. Really important that you have a fundamental knowledge. And also you have how the thought process as well into wealth creation. All right, see you. Thank you so much, and appreciate if you have some questions or maybe some comments below. Even you want to argue with me or maybe Mustafa as well. Can you have your own ideas? So we are more open, and we are more love you to chat with us, or maybe you can respond to us. All right, thank you so much. To see you guys.
Eyvallah.
Hai, saya Jero Azrul. Saya nak anda klik subscribe dan klik notification untuk dapatkan video dan update terbaru daripada Road to FTT.